Hi, everybody. I'm Brittany Lewis, a breaking news reporter here at Forbes. Joining me now is Peter Cohan, Forbes senior contributor and author of Brain Rush, How to Invest and Compete in the Real World of Generative AI. Peter, thanks so much for joining me.
Great to be here. Thanks for inviting me.
There has been a lot of chatter about the AI bubble, if we're even in one, and if so, when is it going to pop? And this conversation really came to a head this week over Nvidia's Q3 earnings report. It was better than expected, beat expectations, and this seemed to quell bubble concerns, at least temporarily. But massive stock market gains were then soon wiped out, and the fears materialized once again. So to start off the conversation, what are your thoughts on the whipsaw that we've seen in the last 48 hours?
Well, it seems to me that it has nothing to do with what Nvidia did, and I wouldn't call it people worrying about the bubble so much as I think people were expecting that the Fed was definitely going to cut rates another 25 basis points at their next meeting. So this was, in my view, a macro reaction because the jobs report came out. The jobs report was better than expected. It seemed that the consensus was that now all of a sudden the Fed is not going to cut in December. And then that meant immediate risk off. Everybody was selling everything. And so I think that's actually what happened. But if you actually analyze what Nvidia reported, it becomes pretty clear that they did a fantastic job. There is a bubble, I will agree with that, but the bubble is not about to burst.
Dan Ives, he's an analyst with Wedbush, and he spoke glowingly of Nvidia. He talked about the bubble, and he said that this was a golden quarter for Nvidia with demand massive and well above street whisper numbers. And he also added this, that these numbers validate the AI revolution is still early days and send the bears back into hibernation mode. So what is your response to that? What do you make of where we are in this AI revolution?
Yes, I mean, I lived through the dot-com bubble. And I've written articles about this. And what's really interesting is that one of the things that really stands out to me is that during the dot-com bubble, there were two different things than what's going on right now. First of all, there were about 2,400 companies that went public during the 4 or 5 years of the dot-com bubble. So far, I don't know if there's been a handful, maybe fewer than 4 or 5 specifically focused AI companies that have gone public. So very few companies have gone public. Second of all, the big thing that caused the collapse, or one of the big things that caused the collapse of the dot-com era, was all this money being borrowed to build out fiber optic capacity, and that caused a number of very large companies, heavily indebted, money-losing companies, to to go bankrupt because they couldn't pay their debt. And what I see now is some debt being used for some companies, and I think the market is treating those companies differently than the rest of the companies. So most of the big players in the AI business are cloud services providers. Microsoft, Google, Meta is sort of building a lot of cloud services, AWS, Amazon. And then Oracle came in. Now, Oracle came in there, and they suddenly announced about a month ago some hundreds of billions of deals. And then when you look at it, you realize that those deals are being done with companies that are losing money, like OpenAI, and they're borrowing money. So this is a company that is borrowing money, and I think the borrowing of the money is the thing that I think investors should be keeping their eye on. If all this capacity to build out the demand for generative AI on cloud services providers, if that money is being financed by borrowing, then that is a sign of trouble. So we have to keep our eye on the amount of money that's being borrowed to build these AI cloud services platforms. And so that's the real danger here. But the scale of that borrowing is right now not close to being about to burst. And if it did burst, it would have a very limited negative effect. If you look at NVIDIA has incredible profit margins, generates lots of cash, is making lots of investments to sort of boost the overall ecosystem, and to some extent, they are buying demand by using this money, but they're also making investments. And if those investments collapse, they have a $4 to $5 trillion market capitalization. Those investments are small in proportion to the overall size of their market capitalization, their profitability, and their cash flow. So therefore, that is another thing that's really good and better about this AI bubble than was going on during the dot-com bubble, when you had all these companies that were going public with no revenue, and there was very little profit to support all of it. I mean, you had these 2,400 companies that went public. There are two big companies that remain from that, now 20 years after, or 25 years after the dot-com bubble burst, namely Amazon and Google.